Hey everyone, it's Alissa Coram here, and it's that time of year again. Yes, it is tax season. It can be a little daunting if you're doing this for the first time as an active trader. So I reached out to an active trader that I know very well, and that is Scott St. Clair. He's manager of IBD's Premium Products Group. So I thought it'd be great to pick his brain about all things to know when it comes to active trading and tax season. So Scott, I don't know many traders personally who are more active than you. You're a very active trader and it's tax season. So as active traders, we got to start thinking about tax season now.
Yeah, it causes me a little bit of anxiety, to be honest with you. I don't like having to organize all my accounts and figure out the gain loss, et cetera, the taxes. But it's something that has to be done. So you definitely want to be prepared and keep good records. That's the key.
Yeah, so it can feel a little daunting, especially when you're managing as many accounts as you manage, for your kids and family members and things like that. So what's helpful for you, speaking of that record keeping process, what are some of the tools out there or different ways that active traders should approach that to have that good record?
Yeah. So I guess the first thing I should say is I'm not an expert on taxes. So definitely do your own homework. And I actually use a tax expert, just because. The other thing is there are lots of tax-free accounts, and maybe we will talk about those later. But that makes it a little bit easier because you don't have to worry about the taxes for Roth IRAs or et cetera. But in a margin account, I track the each month, the gains losses just from like a strict cash flow, pretending that everything is what we would call mark to market. In other words, I might still own the stock, but it's just marked to market, end of month, gains, losses. And at the end of the year, I know exactly what I made or lost from a mark to market standpoint, so that I have a really good idea on what I'm going to report in income. You also there are software products out there. I use one that downloads your data and will do that work for you, which is nice. If you're active, it's good to have something that's grabbing the data from your broker, putting it into a format, and calculating gains and losses, etc. So I do both of those just as kind of a backup.
Yeah. And how much time would you say you work with a tax professional? And yeah, you're right. We're not financial advisors here. Make sure you do your own research on that front. We're just having a discussion, trader to trader. Maybe there's something helpful for those out there to pick up in this. Which the most important thing is, make sure you stay on top of this and you're not waiting till the last second. Because even using a tax professional, how much time does it take you to do your taxes? I'm just curious.
It takes hours because you get a download, a consolidated form from your broker, and it's got every single trade that you've done in there, and you have what's called your gross proceeds. How much stock did you sell or get in that year? So you need to tell, you if you have $100,000 account, if you're active, you could trade millions of dollars worth of stock in there in your gross proceeds. You need to tell the IRS, yeah, but this is what it cost me, right? And so I made $30,000 on that $3 million worth of trading back and forth, as an example. So you need to definitely keep records and match those up, which is why I like that software, because it just grabs all my proceeds, my purchases and sales, and matches it up and tells me what my gross proceeds should be, and then I match it to what the broker sends me. So the good thing is you just have to do this in a taxable account, and most of my accounts are non-taxable. So, but it's work, yeah, because there might be a discrepancy. What the brokers send you is not always 100% accurate. There can be an error. So if you have a really large error, you need to go in there and find it. Where was there a mix-up?
Exactly. And something else that comes up a lot in active trading is wash sales and how that impacts not only how you're trading, but also how you should think about the tax process. So what's your stance on that?
Sure. So from the rule standpoint, it's something that you've sold at a loss. You cannot buy it back within 30 days and claim the loss. So what it's trying to prevent is, let's say I bought Nvidia at 100 on in December 1st, and on December 31st it's at 90. Well, I sell it on the 31st at 90, take the 10-point loss, and then on January 3, when the market opens back up, I just buy Nvidia back at, let's say 90.2 or 8, maybe it's down, whatever. So I've basically sold that stock to claim the tax loss. And that 30-day window is designed to prevent you from doing that. So if in a taxable account, you have to be aware of wash sales. Now, in a non-taxable account, you don't have to worry about all that. So that makes it real easy because you just can, if you want out, you can do that, or you don't have to sell it if you don't want to sell it because there's no loss to write off. The other thing you consider, again, and I will preface this as I'm not an expert on it, but there is a thing called trader status that the IRS has. And it means you're an active trader. You don't have to, you're not subject to the wash sale rule, but you also cannot claim a long-term capital gain. That's my understanding of the trader status rule. So if you're super, super active, like I have been previously, and I have friends, and you're never going to hold anything long enough to get a long-term capital gains, then you probably want to, you could consider trader status. The problem with trader status is it's not black and white. The IRS they don't have a rule that says if you do 30 trades a month, you can qualify for trader status. It just was, when I researched it, it just said, you're active.
Yeah.
And, there's no hard and fast rule, but it's people who are active, who trade securities actively. So you have to consider, there's some thought that would have to go into it. Would the IRS consider me active? I'm pretty certain they would consider me active. So I could do the trader status if I wanted as well. That's something you might want to consider.
Yeah. And so clearly something else that is coming up in this conversation is the benefit of having those tax-free, tax benefit accounts when you're trading, because this is a lot of stuff that you don't have to worry about. So what are some of the tips that you have when you're thinking about what kind of account to open?
Yeah, I am a huge proponent of the Roth IRA. I just think the Roth IRA is the greatest thing since sliced bread. Especially, and I kind of discovered the Roth IRA a little later. I opened my Roth IRA in 2010. The compounding without having to pay taxes is just really starting to show. In 2020 was a fantastic year for growth stock traders. And, my Roth IRA is really, I had a fantastic year. It was really like, wow. And I don't have to pay taxes on that. My wife has a traditional IRA. So, my kids have Coverdell accounts, which is, tax-free till, you use it for education. So I have 401k. I'm all in on the tax-free, believe me. Unfortunately, Uncle Sam is my partner. Depending on what state you live in, I'm in California. We're pretty much close to 50-50 partners. Wow. I basically consider any dollar I make in the market half theirs, just to make it easy for me as far as thinking about expenses and spending money and how much am I going to owe? Because if you have to pay estimated taxes. If you're having a big year, it's July, and you're having a massive, awesome year in your account, your margin account, you're supposed to pay estimated taxes at that point on what you've made. Otherwise, you could be subject to penalties as well. I learned that the hard way one year. I didn't know, and had a big year in the 90s. And I had a penalty. My accountant told me, because if you paid any estimated taxes, I didn't do any of that. So there's a lot to think about, which makes it easy when you have tax-free accounts. You don't have to worry about all that. So I highly, highly recommend, especially if you're young, start a Roth, get it going. Even if you can only put a little bit of money in there. My wife,
Mhm.
I'm sorry, my daughter has a job. She's 16. She has a job. We're going to open up a Roth for her. As soon as my accountant tells me how much money she can put in there, we're getting that started, because the compounding without the taxes is a big deal, which is why everyone thinks about taxes when they're managing their accounts.
Mhm.
They think about, they don't want to sell because they know that, half, depending on where you live, or a third if you're lucky to live in a tax-free state, is going to go to the government.
Right. But Bill O'Neill's stance on that, which has kind of, influenced the way that a lot of us trade, was that's just kind of the cost of business, those wash sales, and that shouldn't impact your other rules. You should be looking at those proper entries and exits and making sure you stick to those rules, even if that wash sale does come into play, because you don't want to just hold a loser forever and ever. But also, if you do get stopped out, that you shouldn't feel like you're holding back if it does set up again, because you could be missing out on a big winner, right?
Yeah, so a lot of people say, well, I can't, if I sell it, I can't buy it back if it sets up again because of the wash sale rule. So that's the advantage of having a tax-free account, because maybe I can't buy it in my margin account, but I can buy it in my Roth or my wife's
Mhm.
Roth, or my SEP IRA or whatever it is. So you should have those types of accounts. So yeah, but I don't think you want to ever consider taxes in your sell decision. Either the stock should be, if the stock needs to be sold, it needs to be sold. Now, if it's December 31st and you think you can, survive one more day, or one more trading day, to avoid that tax, maybe you can think of it. But I never think about taxes when I'm making a valuation on what the stock is doing. Never. I've just been programmed by Bill all those years when I read the book. If the stock needs to be sold, it needs to be sold. I was doing some math when you asked me to be on the show about this and taxes. I thought, oh my gosh, I better do some homework.
Oh, wow. Oh, look at you. This is
This
awesome.
is, because taxes is a complicated thing,
Yes.
and so, but if you had $10,000 and you made 20% a year,
Mhm.
for 10 years, yeah, if I did the kind of a back of the envelope math, you'd have about $26,000 paying taxes each year, because 10 turns into 12. I now have 11, right? I'm going to use 50%.
Right. Right.
11 turns into 13 and change. Now I have 12,100 because of taxes. So you would turn 10 into 26. If you never paid taxes, you would turn 10 into 62. It's a big, big difference. But
Yes.
if you let's say you're now in this market environment where we're in, where you had Shopify and PayPal and Nvidia, and that's how you turned 10 into 62 over a 10-year period, because 20% would be, compounded is an excellent return.
Mhm.
Well, now you're down 35% on the 62. So, 62 down 35%, you've got roughly 40. And
Yeah.
then you say, gosh, the market looks terrible. Let's go ahead and sell. And you sell, and now you're gonna owe some taxes, right? On the 30 that you made. Let's say, let's just use 25%. So, you go from 40 down to, say, 32. So 32 is more than 26, but it's not it wasn't as much previously as the 62, which was
Yeah.
almost triple. So they're going to get you for the taxes either way. They might get you on a lower end. And if you ignore some sell signals, then you don't have to worry about that large tax bill. That's what Bill would say.
Yeah. Man, that's really putting things into perspective when you just do the napkin math numbers like that, Scott. So, what would you say in closing if someone's going out there to do their own research to really get a good grip on their finances, their taxes here? It just seems like it comes down to doing that research, relying on experts as well to help you along the way. But what would be your advice out there to someone who's just getting started with this kind of journey?
Yeah, I think the key is just good record keeping as a general rule. Just keep in Excel, something simple in Excel. What was my account on January 1? What is my account on December 31st? Did I put any money in? Did I take any money out? And I just have a mark to market gain of X amount or a loss. That can happen, unfortunately. And now you have a baseline that when you do your taxes, if your account went up $25,000, but your when you do your taxes it said you made 125,000, something's wrong. And
Right.
so I do both. I do the Excel baseline from just a mark to market standpoint. I know within very good number what my tax gain was for the year, and then I have the software that does the downloading and does it just matches them all up, and then it tells me what it says I made, and those numbers, they should be exact,
Right.
but they're not always going to be perfectly exact, but they should be very, very, very close. And so then it gives you some comfort knowing if you make a mistake, you didn't make a big mistake. If I think I made 25 and I'm really made 30, I made a mistake. Well, that's not going to come back to bite me, so to speak. But you really want to keep good records so you know exactly where you stand.
Such good points there. We can't say it enough about those tax benefits. Definitely make sure you look into that. Scott, thank you so much for this wide ranging discussion on taxes. I feel like it's something that we don't get the opportunity to talk about a whole bunch, but it's an important part of trading. So I'm glad that we were able to get your insights today.
Thank you, Al. It's always great to be on the show with you.
Well, I hope you enjoyed that video with Scott. I guess it's time for me to finally just bite the bullet and go do my taxes. I've kind of been avoiding them, but it's okay. We'll get it done. We'll all get it done together. Now, leave me a comment. Let me know what your biggest tip for tax season is as an active trader. And don't forget, subscribe to my channel so you can stay up to date on all the latest videos.